Good afternoon, everybody. Uneducated Economist here. So it looks like the dollar is still wreaking havoc in China. I'm going to leave a link down in the description to an article talking about how two property developers have just recently defaulted on their dollar-denominated debt. Now, this is something that I don't know if a lot of people are trying to wrap their heads around when it comes to all the news that you hear about de-dollarization, about how the whole world is going to abandon the dollar as a world reserve currency. I don't know how many people actually think about how much debt is due in dollars right now. Like, think about these property developers in China. These are corporations. They don't have anything to do with the United States, don't have anything to do with their government, don't have anything to do with our banking system. I mean, they might have a little bit to do with our investors if somebody bought their corporate debt, essentially the bonds that they have issued. But ultimately, these are Chinese corporations in China operating within, the Chinese properties, right? They don't have anything to do with the United States in that sense. But yet they have debt that is due in dollars, right? In US dollars. And now, this is something that I encourage people to continue to research and investigate when they hear about how the dollar is losing its world reserve currency status, which very well could be true, except that there's nothing out there to replace it. And when it comes to getting the best deal on your interest as far as your loans, you're going to do it in dollars. Almost always do countries always go for the dollar. Not always, I shouldn't say that. A lot of times what you are going to find is that when nations or corporations are looking to borrow money, that they are going to get the best financing when they go through dollars, right, as opposed to any other currency. And that's still the case today. Now, granted, yes, there is plenty of situations in which that you can focus in and point at and say, hey, look, right there's de-dollarization taking place. And I would totally agree with it. It is definitely happening out there. But when you have debts that are due in dollars like this, then this is the demand for dollars that a lot of people, I think, are not thinking about. Like, they are not anticipating that what happens when these corporations go into default, because that is the demand for dollars right there that a lot of people think that don't exist, right? That's it right there. And when those debts disappear, somebody has to write off all the dollar-denominated investment that they had were taken out, right? I mean, so what am I trying to say here? You buy defaulting, or you buy the bonds of a corporation in China, and then they start to default on it. That's your dollars being lost, right? And if you don't have those dollars anymore, guess what? That starts to strengthen the dollar. It's as if dollars disappear, right? So now we have to think about that, when it comes to how much demand for dollars are out there. Again, I don't know if I explained that quite right, but when you have corporations out there who have created instruments of debt that are due in dollars, not only do they get the dollars for writing those instruments of debt, but then those instruments of debt themselves get used as dollars. When those things disappear, dollars disappear from the system as well. And again, this is something that we really have to think about. And when it comes to the contagion effect, right? Because when these corporations begin to fall, like I couldn't tell you if this is what's going to happen, but starting off with Evergrande a few years ago and now still leading into property development problems today, I would only assume that a lot of this is contagion that has taken place from 2 years ago when the major property developer of Evergrande started to default on their bonds. So now what happens is if you don't understand the contagion effect of it, when you have corporations or, say for example, like these property developers, when they hire somebody else to work, they're going to develop this, apartment complex, and they hire people to come in and do the framing of the apartment complex. I'm just making this for an example, right? Well, what ends up happening is a lot of times when they pay those contractors, they'll pay them in something called commercial paper, which is a lot like a bond, but not really, because what it is, it's the payment going to the contractor for a face value that is due in the future, right? So say it's $100 face value on this commercial paper, but it doesn't come due for a year, right? Well, the contractor can accept this commercial paper as if they got paid, $98. Here, you can have this commercial paper. They could go cash it in right now and get paid their $98, or they can hold on to it for a short time and then collect a little bit of interest off of it. Does that kind of make sense? That's what this commercial paper is. And so a lot of times, these big corporations like Evergrande would pay in commercial paper because it kind of gives them a short-term loan going to their contractors. It's like, hey, we'll pay you, but don't, cash this for another, 6 months or a year or whatever. So that's like a short-term loan that Evergrande can get by issuing out commercial paper when they go to pay their contractors. Now, if these contractors or these other corporations are out there, they start putting this commercial paper on their balance sheet. Well, what ends up happening when you have a corporation like Evergrande who starts to go into default, well, that commercial paper starts losing value. Right? So although you could turn it in right now and not get the face value, but get take a little bit of a loss on it, you might find when you go to cash or go to sell it off that nobody wants it. And now if you hold on to it for the year, you might find that it might default by the time you get there. When it goes to mature, you'll find that you can't get paid for it at all because Evergrande has completely defaulted. So when this commercial paper sits on the balance sheets of a lot of these corporations out there, what you'll end up finding is that their balance sheet ends up falling on their asset side due to this commercial paper losing value. Whether it's bonds or commercial paper or anything, this is the same thing that happened with, say, the banking system here in the United States a few months ago, when all of a sudden the assets that were sitting on a lot of these banks started to fall, and then people started pulling their cash out. That's their liabilities going up. So it threw their balance sheet way out of whack, and they weren't able to, provide loans, and their credit rating went to hell. And that's when the Treasury in the United States stepped in and said, okay, here, we're going to, or the Federal Reserve, came in and said, we'll buy these assets at 100% on the face value of it as opposed to what the market value is. And they didn't really buy them. They actually just lent the money using those treasuries as collateral at face value as opposed to market value. And so we kind of had something very similar here in the United States. So if you can imagine, when you have these commercial papers and you're a contractor over in China working for, one of these property developers, and they're paying you in commercial paper, and all of a sudden they're starting to go into default, or they're having issues making their bond payments, that commercial paper starts losing value. Next thing you know, your balance sheet's out of whack and your credit rating starts going to hell, and all the loans that you have issued out there are now potentially going to be going into default, as you may not be able to make the payments on your loans. And so this is kind of the contagion effect that begins to take place as we see these property developers start to default on their dollar-denominated bonds. Now, when it's these dollar-denominated bonds, you have to think, as the Federal Reserve is tightening up the monetary supply, right, the money supply. Now, a lot of people don't think about this because all they think is money printing, and that's the only thing that's taken place, but it's actually the opposite. It's quantitative tightening that is the bigger deal, because what that does is it starts pulling money out of the system. Now, again, a lot of people don't believe that's happening, but that is what's truly taking place. And now when it comes to the Federal Reserve and their balance sheet, they have treasuries and mortgage-backed securities and all kinds of stuff on their balance sheet, right? Their assets and liabilities. Their assets are all the loans, those treasuries, those mortgage-backed securities, and the liabilities is all the money that went out there. Well, as these treasuries mature, as the mortgage-backed securities mature, that's dollars coming back to the Federal Reserve and essentially disappear. That's tightening up the monetary supply, and that's making it difficult for places like China or these corporations in China to get a hold of the dollars that they need in order to pay their debts. If they have a slowing economy where less people are, doing projects and stuff, they're going to have a hard time, figuring out where it is that they're going to be able to do the business to get the dollars to pay those bonds. So this is really where I think a lot of people are hearing so much talk about de-dollarization, global de-dollarization, that they fail to understand that there is still situations very much like what China's experiencing with their property developers, and these same stories are all over the world. Right? There is nations and corporations that have taken out a lot of dollar-denominated debt. And in order to get out of that dollar-denominated debt, they have to get the dollars first, which is going to strengthen the dollar. making it very difficult for these nations to try and, continue on with business, rolling their debts over into new debts, or just simply paying those debts without just, defaulting and going bankrupt. And this is what, again, this is what the world is experiencing. So much different from what we experience here in the United States. Okay, I'm kind of rambling, but let's kind of finish this thing up. Here in the United States, it's very different in what we are experiencing with our property developers. Because, you see the commercial property is just taking a raking over the coals. I mean, people are talking about how this is going to be the next great financial crisis is due to the massive commercial real estate that's going to go bankrupt. I mean, it's like the news is everywhere about it. But yet you hear about how the home builders are in the best position they have pretty much ever been in, as the price of real estate, individual homes for people are now just skyrocketing again, giving these builders the opportunity to start building again into an environment of increasing prices, not decreasing prices. And again, this is something like a lot of people are going to argue with me about, saying, man, you don't know, it's all the housing market is all, going to crash or whatever. Okay, that might still come, and I'm not trying to deny that. What I am trying to say is that just look at the home builder sentiment increasing, and look at the home builder stock. Look at how I don't know, I don't even know the word for it anymore. It's just how enthusiastic they are to be in their business right now, these builders. Right? It's very interesting times. Uneducated Economist, you let me know.